Welcome to part one of breakout pattern and potential reversal pattern trading for cryptocurrency markets. So there are 6 patterns today, which I want to show you and explain how these patterns work. Now there's going to be part 2 as well, where I'm actually going to showcase, find all the backtest and the data for you so you don't have to, and showcase how these work on Bitcoin, the cryptocurrency markets, and just the financial instruments industry as an overall. So without further ado, let's get to the video. What's happening, guys? Dan Chung here, aka Champy, your host today on Coin Bureau Trading. 700k verified funded trader, meaning that I've got 700k worth of funds to trade. So someone's actually had the trust and given me their 700k to trade for them and make a profit. So verified track record as an overall. So on this channel, we do lots of learn and earn. And today what we're going to be talking about is these breakout patterns. And breakout patterns basically mean ultimately price is accumulated in certain areas, and then we can see as an overall price will spike. So if we look at this Bitcoin chart, we can actually see these breakouts and these spikes every single time. And when I say spikes, it's kind of like these large movements that have pushed up every single time, and they can actually even push it down as well, push up here, and then another example of pushing down. Now, there are many reasons of why price can do this. It can be liquidity, there can be volume, it could be news related, it could even just be fear or even the public generated as an overall. Just an example, XRP, the community made a pump and dump for that. And it happens a lot when it comes to meme coins and other cryptocurrencies. However, for a more mature market, and when we say mature, this means manipulation is a little bit less. It's for a financial instrument that has quite a large market cap, and also a financial instrument that has been around for a little bit of time. So it wasn't made yesterday for just the giggles. I mean, generally this could be a breakout out of this wedge pattern here, where we can see this ended up breaking out and then pushing up to the upside. And then for another example here, I've drawn a wedge here, which at that time, there must have been a wedge on a lower time frame. So if we zoom in onto a lower time frame, we can see price was rejecting this upper trend line and this lower trend line as well, and then broke out onto the downside and then melted. So these are just 2 really quick examples to show you that breakouts happen, and they can be multiple reasons to them. Now, there are these little examples that I've came across and I thought was quite cool. Let's make a video for the Coin Bureau Trading fan to help them learn and learn. The first one we have is the ascending triangle, and we see this red dotted line here, which is ultimately a resistance, and this resistance is basically price every single time that comes to this has rejected. This is a key level which we constantly mention on this channel, where price just keeps rejecting and rejecting. However, when it does reject, it actually makes higher lows every single time. So this gives us a bullish confirmation and a bullish momentum. And the reason we say that is because this is making a high each time and just building that momentum like a coil to absolutely spring out, break out of this resistance, and then have a breakout onto the upside. And then the second version of the ascending triangle for a breakout onto the downside as opposed to the upside is we still have exactly the same setup. So we have the resistance, we still have these higher lows, but what happens is, as we can see, these higher lows have created a trend line to the upside. We end up breaking the previous low and then looking to push and have the momentum onto the downside. Now for trades like this, a really good little tip is to see these previous lines here will be great key levels to have as take profits. So they're the 2 examples for the ascending triangle. Now if we look at the next one, which we have is the descending triangle, and ultimately this is the inverse. So instead of a resistance, we have a lovely support where prices reacted to this support every single time. Now this one is a bit more of a reversal, where we've got a lower high and a lower high, then we've broken out of that trend line onto the upside and then looking to push and break higher. Now on the opposite scenario, what we have is we've got that support. On that support, we're making lower highs all the way through, and then once we've finally broken that support, there has a good little breakout from there. Then we have something called the symmetrical triangle. Now this is just more like a wedge. There are so many different ways you can call these, but ultimately in trading, I find a lot of things just are named differently for different people, just because you can see something, I can see something is all the same but different. So what a great idea of this is ultimately we've got higher lows and then it's kind of wedging in just like a spring and a coil, and then it looks to break out. But the thing is, with these types of patterns, these can generally break out either side. Now for me, I generally have a bit more of a bias. So when I'm trading an ascending triangle, I would much prefer this to have a breakout onto the upside because it's bullish, right? We've got higher lows and higher highs to some degree. Yes, there's a resistance, but as soon as we break out that resistance, there is a great momentum and volume. Same thing for a descending triangle. I generally have a bias for a descending triangle to be a sell, because if we do get a breakout onto downside, that is a continuation of the movement. So we will be doing a part 2, and this is just like a great example right there with that exact wedge pattern that I just showed you, breaking out onto the downside here and then having lots of momentum to continue from there. By the way guys, if you are learning so far with these patterns, don't forget to check out our link in the description below for our exclusive Bybit competition, where there's up to $40,000 worth of bonuses. That's right, $40,000 worth of bonuses, 0% maker fee, and up to $30 airdrops as well. So there's actually current competitions where there's up to $50 airdrops, and there are tons of competitions that we run throughout the year. So if you want to stay up to date with them, link in the description below, and let's get back to the video. So in part 2, I'll go through example after example just to kind of show you how we back test and sample test, and that's how trading works. We find what strategy works or find what patterns work, and then keep doing them to refine it down to one pattern that we see very clearly ourselves, and then we just keep rinsing and repeating and trading that one pattern professionally and executing it to the best ability we can and to be profitable. I hope you guys enjoyed that video. Remember to like, share and subscribe, and drop a comment if you want to see part 2 to help you guys learn and earn. So thanks for watching. Champ out. Peace.